Welcome to Around the Blockchain. Today, we're going to be talking about the egg prices. What is going on? Is there an egg coin I can long? Also, we're going to be talking about Powell and his hawkish stance. Is it going to hold water? And also the Winklevii making them some demands to Barry Silbert. And what is going on with DCG? They are airing all of the dirty laundry. We have all the receipts here. All right, let's get right into it. On today, we have Forrest on the top right. I like to call him Ox Stacker, but he's 0x. Make sure you follow him. Just a great breadth of knowledge when it comes to crypto. Then on the bottom right, first time on the new channel, it is Better Call Chris, also known as the Greek Crypto. And he's rocking those famous Greek colors. Maybe he'll bust out some baklava or something later on. Then on the bottom left, we have Hotep Jesus. Make sure you follow him. Some of the best just commentary you'll see on all of the interwebs. Make sure you follow him. And another friend of the channel, we have Caleb Franzen, sorry. And hey, it's the first time we've seen you not in a button up. Hey, he's out there. Now, it's the bear market for touching grass.
Is the bear market for touching grass? Maybe for the Bulls. I don't know.
All right. What Bull jersey do you got today?
We're running some classic Jordan 23.
All right. You know what? I say BJ Armstrong's the best guard they ever had. I stand by that. No, we love Jordan. We love Jordan. All right. Yeah, like I said, we're going to be talking about eggs, and I did not know we were going to do this topic. I actually tweeted about eggs yesterday. I know it sounds crazy, but have you seen what is going on with these prices? I just tweeted this out. Should I mine Bitcoin or build a chicken coop? Honestly, the responses across the board were get some eggs. I wanted to share you this chart real quick. Let me zoom out. Average price of eggs for grade A, large, and look at this chart. July 2017. You see it here, about $1.30. Here, $1.25. Oh my God, this huge spike up to $2. Then it's just been a run to the races. And in some states, they have more than tripled in this time. Here you can see about not quite a double, but in California, a dozen went from about $2.20, $2.26, now about $7.50. We're seeing the price just skyrocket across the board. Now, Hotep Jesus, I wanted to ask you about this because, my tinfoil hat comes on, and I remember 12 months ago, there was processing plants just burning left and right. Maybe it was, I was just looking at the wrong news sources, but it seems scary to me. Now I'm seeing avian epidemic. Is our livestock getting sick? Is this the new poultry plant burned down?
Well, here's the thing. Anytime you allow communists to come into power, you should expect calamity as far as food is concerned. You should expect massive inflation. You should just expect overall destruction anytime you allow communists to come into power. This is fully expected. I was talking before about some of the best investments in the world. Obviously, we have crypto, stocks, bonds, but the main ones I said were chickens and guns. These are, if we were prepared for this, then you wouldn't have to worry about the price of eggs. I myself, one of my dreams is to have a chicken coop. If you check out Tim Pool has a chicken coop. I think this is something that, back in the day, it was very common was to have chickens. If you check my family down south, they have chickens. But yeah, like I said, you allow communists to run your nation, you should expect starvation and inflation. It's just track record.
I remember that answer. It was what should we be investing in? It was brass, lead, and poultry, and it was not the answer I was expecting there. But end up being definitely a good choice there. Joke was from BJ. I have to give him credit there. Now. Let's see, Caleb, I'm going to throw some numbers at here. 58 million birds now have the avian flu as of January 6th, 47 states, economic loss of 3.3 billion. Now, there was an avian flu, roughly about the same amount died. It was a little over 50 million. It happened about 5-6 years ago. The price of eggs is somewhat normalized after that. Are you expecting a normalization of prices this time as well? Or are the other forces of inflation and the economy and people replacing beef with eggs, is there too much headwinds against that for eggs to come back down to normal prices?
That's a really great question, DZ. There's one clarification that I want to make, because that chart that you showed from the Federal Reserve Economic Database is phenomenal. But that's month-end data for November of 2022, when average egg prices were around $3.60. The data I'm looking at right now is showing above $5 a dozen. I might have said gallon earlier, my bad. Either way, if we look at the year-over-year rate of change, it's over 100% as of the November data. So where we are right now is significantly worse. And when I look at the chart and I look at the year-over-year rate of change on a rolling basis, the highest we've ever had is back in the early 80s. We got to about 66% on a year-over-year basis. You mentioned the avian flu from a couple of years back. It looks like that was in around 2015. We got to a 50% increase on a year-over-year basis. So clearly right now we're at all-time highs in terms of the year-over-year rate of change for average egg prices. These are very unique and extreme conditions. So I think, to your point, it highlights both what's happening in terms of poultry health and disease, in addition to what's happening with general inflation dynamics. Broadly speaking, across the board, we haven't really seen food inflation, grocery store inflation, restaurant inflation slow down to a significant degree. And I think that's going to be one of the Fed's challenges going forward.
All right. Well, better call, Chris, when we're talking about recovering from an economic downturn. I think you're kind of uniquely positioned, being from Greece. There's the huge EU issue. How long ago was that? About 7 years ago, give or take, maybe closer to 10. What is your expectation with egg prices, and what do you experience over there in Greece? I know it's not feta cheese or focaccia bread, but are you also seeing that huge uptick in the price when it comes to eggs?
Not yet. I don't remember the last time I bought eggs, to be fair, but a lot of people got egg on their face because of this egg problem that we got. So it's the eggs that are in the shops now about €360, and so we haven't got to that point yet. But as you know, we're going to be behind in times when it comes to situations like this. So we're talking maybe a couple of months, maybe we will have a situation with an egg problem.
Okay. All right. Now, Forrest, what are some of the other tea leaves you're maybe looking at that could be impacted? We didn't quite get that oil price hike that we were expecting, that could potentially still be on the table. Are there other industries in the agricultural market, because as we move away from beef and move away from, I think venison is down, pork is also down. So they're being replaced by other items. Do you think there's other things that, maybe keep an eye on?
Yeah, I do think that this is going to ripple and permeate through the entire food industry. If you think about it, like think about oil. Oil actually front runs inflation to a large degree, oil prices. So when you have a huge spike in oil or a huge drop in oil prices, that'll usually be a fairly decent indicator for the direction of the inflation rate. It's not perfect, but the idea is that oil is just in everything. It's in all products and services are dependent upon have some of their costs, to produce or to create. Some of that cost is due to oil. Same thing with the food industry. Eggs are in everything. Eggs are a staple ingredient in everything, and it's a very, very predominant source of protein, at least in the U.S. American diet. I don't know elsewhere, but yeah, I mean, maybe we see this permeate, and we see people push towards other sources of protein. Maybe beef goes up a little bit. Maybe it pushes people back towards. I mean, obviously, chicken and poultry is going to be expensive, I would imagine. I don't know if the virus is affecting those type of chickens as well. But there's we're starting to see a push for bugs and crickets, and it makes you wonder. And I know that's kind of off beat and off base here, but it does make you wonder: is it all connected? Is it all a plan? If we put on our tinfoil hats, are we being pushed in the direction of getting our protein from soy burgers and crickets? I, for one, will not be eating crickets. Now, the last thing I'll say is, interestingly, one of the most wealthy people I know, one of the richest guys I know, he runs a business, a chicken coop installation business. Keeping those chickens alive in the winter is huge. You got to keep them alive, and that's a huge business. I just thought that was interesting.
No, it was interesting enough. I was actually watching how to build a chicken coop videos over the past week. Did not, again, those before the egg tweet. I didn't know what was happening. Hotep, What do you think about the push to eat cricket protein? And I mean, is there a concerted push by, the powers that be, maybe World Economic Forum, maybe Bill Gates and his crew? Is that a real thing, or is this, maybe people just trying to make sure those that are traditionally malnourished do have the sustenance they need to, make it a full 365 days without rapidly losing weight?
I'm going to go ahead and deviate from the pack here and say eating bugs is good. It's a very valuable source of protein. You're currently eating bugs. If you eat food, you eating bugs right now. FDA has in their policy somewhere that a certain amount of bugs are allowed to be in your food, so you're already eating them. Also, I think this is more of ominous of what's to come. Basically, what they're saying is starvation is going to become a problem. We're going to need something that's going to grow a little bit faster, a little bit better, a little bit cheaper. And they're basically telling you that they're not going to feed you bugs. You're going to feed yourself bugs. You're going to want to cultivate larvae, maggots, all types of things like that. But I think this is just more foreshadowing of the future starvation that is probably going to plague the planet.
All right. Well, Chris, what do you say to that? I mean, there's a lot of economic worries, especially around your part of the European Union, that maybe didn't seem to come to fruition. I mean, is this something that you're still worried about down the line later on, or is this, hey, maybe the worst is behind us, hopefully up and to the right for a brief period?
I reckon what's going on, things are going to get worse. We know these things. It's the signs are there, and we just have to keep on going, 1 foot at a time, just to see how things go. Because we had a hard year last year. We're going to have a hard year this year. Food prices are getting higher. It's just the signs of those days.
All right. Well, let's move on. And next topic brought to you by bcvault.com. If you can crack it, get a free Bitcoin, but you need to vault some eggs is what we're saying here. Now, we're going to talk about Jerome Powell. I have a picture of him here, right here. He's, I believe, appears that he's holding in a snart. He was saying stabilizing prices. Hey, we're going to have some tough decisions, and it's going to be unpopular politically. He's saying the Fed, now I found this one fascinating, talking about the climate. We're not going to be affected by climate decision-making and will not and cannot be a climate policy maker. But there were no direct clues in the direction that the policy is heading. Now, Caleb, I know you're following it closely. A lot of traders are watching it. Is there a little hint of bullishness? There's a little hint of bearishness. Is he dovish, hawkish? What is going on with Jerome Powell? Now that it's settled somewhat, the YOLO traders, they got scammed, wicked out for the first 10 minutes, 15 minutes after his speech. Now that the dust is settled, what are the experienced traders saying? Where are we maybe heading for the next month or two?
So personally, I didn't really feel like Powell's comments this morning, which was generally a symposium to address central bank independence from politics. I didn't think it really had too much to do with where the Fed is going right now and what they're doing as it pertains to inflation dynamics. He did acknowledge that the Fed might be forced to things that are unfavorably perceived by perhaps politicians or basically U.S. consumers, so on and so forth, because the Fed has consistently reiterated that even if we start to see signs of a recession or weakness in the labor market, they're outright trying to accomplish those things. So just because we start to see negative economic data, negative labor market data, doesn't mean that they're going to necessarily take their foot off the gas pedal. It simply means that what they're doing is working and that they're going to still have room to go, right? And so PI report on Thursday morning is going to be very huge. I think right now investors are kind of, I don't want to say a little bit euphoric, but generally speaking, we have an absence of economic data this week leading into Thursday. And Powell's comments today, I mean, he spoke amongst other central bankers, other policymakers. This was not a Fed meeting. This was a general central bank symposium and discussion. And so I think investors are kind of celebrating in some form or another the fact that we're kind of operating in this vacuum, absent of economic data, absent of Fed speak, even though that's kind of what we got this morning. And so, I wasn't surprised to see, I think generally speaking, the market dynamics that we've seen since yesterday's open, and then the kind of reversal that we saw today. And so I'm going to be interested to see how dynamics play out tomorrow. I generally expect there to be low volume until the end of tomorrow's session, and then fireworks on Thursday, depending on how the CPI rolls out.
All right. Yeah, I think that's a pretty good prediction. Lack of knowledge is kind of weight. Markets do not like uncertainty, and they definitely like certainty. Even if they're wrong, if they're certain about it, they're definitely going to make some big bets. Now, Hotep, I want to ask you, what do you think Powell meant when he said we are not going to be climate policy makers? Do you take him for his word at that? That he's maybe rejecting some of the broad sweeping regulations that they're trying to put on things, giving it a certain moniker, saying, hey, this oil company is more green than, say, this electric car maker.
It's called a smoke screen. It's called a distraction. It's called a diversion. He in this article I read, he said something about the Federal Reserve Bank doesn't want to make decisions that are controlled by policy, politics, et cetera, when we all know the opposite to be true. It's the money that dictates policy. Nice try, pal. You can't get that one over on me. So we also have to take a look at his decision about raising interest rates. Thomas Sowell, in his book Basic Economics, I believe it's chapter 6 or 16, I can't remember, basically said that in a recession, if you were to raise interest rates, you wouldn't pass the Econ 101 course. So not only is Powell duplicitous, he's also a failure in the eyes of Thomas. Powell duplicitous, he's also a failure in the eyes of Thomas Sowell. Lastly, when we look at something like the panic of 1819, where they contracted the money supply by something like 60% or something like that, we saw basic calamity again throughout the economy. So this is basically a setup going into the 2024 election. And what they want to do is they want to sink the economy so that in 2024, there'll be some sort of rebound. And the Democrats can say, look what we did. We made things better, just like they did with gas prices. The gas prices went through the roof. Then they settled down a little bit and they said, oh, look what we did. They did the same thing with employment. They destroyed the economy during the COVID pandemic. And then they said they created new jobs last year. That's not what they did. What happened were jobs were recovered. But again, this is just duplicitous behavior by the Federal Reserve Bank, and they can't pull one over on me.
All right. Yeah. Not pulling one over Hotep's eyes here. Now, Forrest, I want to talk about the ending rates. It looks like the Fed funds rates are going to be roughly around 5%, meaning a lot of people are going to be able to get risk-free returns probably around 5% by the end of the year, middle of the year. So that's going to put a lot of pressure on these growth stocks. It's going to put a lot of pressure on stocks, trying to pay out a dividend. What do you think is going to happen? What is the tail end effect of risk-free 5% yields? I mean, is this going to be good for the markets? Is this good for crypto? Is this going to be bad for crypto?
I think it's generally going to be bad for risk assets. We're just in this kind of time frame where it's difficult to time the market a little bit right now, and there's obviously a lot of analysis floating around about when the market bottoms, 6 to 12 months after a Fed pivot, but we really haven't nailed down, and the Fed really hasn't nailed down when they're actually going to pivot. They don't even have a pivot scheduled in for 2023. I do think that they'll pivot in 2023. I think they'll have to change course. I think the economy is going to be so bad and on the verge of breaking that they're going to have to pivot sooner than what they expect. But also at the same time, like usually the S&P 500 and the overall market peaks slightly after or in congruence with or around the time that pivot happens. So there is analysis to say that it kind of overlaps with what we're seeing right now in this little January rally. There's analysis that would suggest that maybe we go up before we go down. So I still have recession in my sights for 2023, but I'm not counting out the potential extension of this rally that we're currently seeing.
Okay. Yeah, well, on that note, I was going to say, on the note of whether or not we do hit a recession, Caleb, you actually had a pretty good tweet about whether or not we're going to hit a recession. For someone like Forrest saying, I'm not quite discounting it. You seem pretty certain, at least in the short term, that recession seems to be, maybe not a possibility with the numbers we're seeing. Is this maybe a short quarterly bounce, or are you still thinking that, maybe a recession is possible?
Well, so in my 2023 market outlook, I provided 5 or 6 different data points. They're all independent charts with a 90 to 100% accuracy for predicting a recession between 6 and 20 months of them flashing. And so a lot of these flashed basically between July and October of 2022. Some flashed at the very end of December. And so from my perspective, I think there's a very high chance of a recession, especially, aside from just that data alone, but especially considering what's the Fed's playbook. They always over tighten because they're using backwards looking data. They tighten at the end of a credit cycle and they cause a burst. Then they overstimulate to get us out of it. They stay there for too long and they pump asset bubbles, rinse and repeat that same cycle again and again. And so from my perspective, right now, unequivocally, we are not in a recession. We're looking at 4.1% real GDP growth for Q4 of 2022 after getting, I think, 3.5 or 3.6% in Q3 of 2022. That is not an economic slowdown. However, when we look at forward-looking economic indicators and certain metrics, again, I highly encourage you to just go ahead and read my 2023 market outlook. I have all the data in there. When we look at those forward-looking indicators, they're not painting a rosy picture for the US economy, even though we have historically low unemployment, a dynamic labor market. In my opinion, all of those things, like I said, are backwards looking. So we need to look forward where we're headed. And so the economy right now, consumption and aggregate demand is very strong, hence why we still have a lot of this sticky inflation. So I've never heard of a recession where aggregate demand is strong. So right now we're not in a recession, although I think unequivocally we are trending towards one.
All right. Now, Better Call Chris, you had a recession in Greece. It was very well publicized. And we're kind of hearing whispers of the same thing for the EU. What does it appear looking like for the EU specifically heading into 23? Is it looking like a belt tightening time, or are we starting to see, maybe some of the forward-looking indicators are turning a little bit more bullish than the past-looking ones?
I think things are going to get better, but I do think at the moment it's like a Titanic moment that we see the iceberg is there. We're ready to hit it. But what's going to happen? Are we going to jump ship, or is it going to be better? But I do believe that we're going into a recession now because things are getting harder. Work and all these type of things, money, saving money, banks. We saw in Cyprus when I think it's 2012, 2013 when the banks went under. It's looking not as bad as that, but it could go to that.
Okay, so you've seen some of the signs, but maybe not all of the ones you saw previously. All right. Well, Hotep Jesus, now Caleb, you kind of spelled out a rosy outlook. So, maybe we're looking at the past, we're looking behind us too much. How are you feeling about the future, the next 6 months, 12 months? Is there a rosy outlook where, maybe we're just going to have some sustained growth and all of this hoopla about, economy taking a downturn is, all for naught?
I don't know. I'll be honest. I don't know what to expect. I'm hoping for the worst. Because the worst means cheap prices for overall investment opportunities, which means I get to buy things at a lower price so that when we get the boom in 2024, moving on into 2025 after Trump wins, then, I can maybe cash out on some of these investments that I've made. I'm a long-term guy. I don't do the whole day trading thing. I don't have the patience for it. I don't have the time for it. I'm more of a long-term guy. And I just want things to go down a little bit more. It's going to be hard, but I've been holding on to cash because, when you come from TradFi, you understand that in these boom cycles, you kind of want to conserve your money because everybody else is spending it. And then in a recession, that money that you saved, you want to just double down on those investments that you usually DCA into and probably increase your DCA during those time periods because it's so low and you can get things at a cheaper average price. So, I'm hoping for the worst. And but for other people, for others, I'm hoping for the best.
All right, and I'm gonna give you an extra point for counter betting SBF with Trump winning the nomination. If it came down, put my money where SBF put his money or Hotep, I'm putting it with Hotep. So now I don't know DeSantis. You got a challenger enter the arena. Now, Forrest, I also want to follow up with the possibly a rosier picture than we're maybe expecting. Would any of this change your outlook for a DCA strategy? Are you planning to DCA in 23? And is the overall U.S. economy affecting that strategy at all?
Yeah, a little bit. My strategy lately has been to identify some shorter term plays, whether it's just shorter term trades, shorter term pumps. But yeah, at the end of the day, in a recession, they say cash is king. But what I like to say is cash flow is king. So now's the time to be building. Now's the time to be working on cash flow, expanding. You can always, you can always make more money, and that's going to increase your DCA. Yeah, and aside from that, I do think that the market has a chance to. I think we've been overdue for a bear market rally. I'm fairly allocated right now. I'm not completely risk on, but I'm fairly allocated because I do think that things got oversold. We've already kind of seen the short squeeze. I think we may see some continue in the crypto market. And we're historically at one of the most bullish points in a presidential election cycle that you could possibly be. From the date of a midterm election, historically, 6 months after that, the average return out of the S&P 500 is 15.1%. And that data stretches all the way back to the 1900s, the early 1900s, pre-1929. So that data includes war, it includes recession, it includes all sorts of different monetary policy circumstances. And despite that, we still see that 15% bump on average in the S&P 500 following the midterm election. So I do think we can get a little bit of a rally here, and I'll be looking to lock in some profits if we do, to potentially have more capital set aside to buy a recession if we do get a larger crash in mid to late 2023.
All right. Well said. All right. Well, let's move on and talk about the Winklevii. Yes, the famous twins from that social media movie. They are now demanding digital currency groups, Barry Silbert, step down. They did another letter. It's about 4 pages long. We're not going to read the whole thing, but he's publicly accusing Genesis and Digital Currency Group of committing fraud and demanding the CEO step down, saying there's no path forward as long as Silbert remains CEO. And he has proven himself unfit to run the company, and saying he and other key personnel conspired to make false statements and misrepresent Gemini investors and the general public about Genesis financial health. And then he goes on to list tweet after tweet after tweet saying, here is where you have wronged us. Here's where you're just being quite dishonest. Now, I'm going to try to separate the accounting part of it, but a lot of it had to do with an asset that normally you wouldn't count as an asset, but in this particular case, he did count as an asset. I think it was a 10-year note. Normally, you don't count as an asset unless you can get something after 12 months. Now, better call Chris. Have you been following this whole Genesis, Gemini debacle with the Winklevii, with DCG? Where do you see this heading? And, at the end of the day, are these customers going to get their money back, do you think?
Sadly, I would love them to get their money back, but I don't see that happening. I'd see it's be another FTX situation. And me personally, I think 80% of these exchanges won't be here. Same with some of the cryptos, 80% of them won't be here. So I think we just need to get rid of these bad actors, and then think things will be a lot better.
All right. Yeah, no, I pulled up the letter here, earn update, open letter to the board of DCG. You can see here, no double spacing there, a decent amount. But, there's also receiving criticism, just one of the top comments. Why didn't you pull money out of earned when Three Arrows Capital happened? One of the first things the first domino to fall, many are calling it. Now, Hotep Jesus, we got the Winklevii, they're famous. They're good at rowing boats. They're good at getting their social media ideas stolen. But what do you see this heading? I mean, this seems to be another, their second very famous public court battle. Is this going to be the similar thing with Facebook where this is going to take years, and then by the time it ends, we don't even really know what happened? There's, things having closed doors and NDAs. Are we really going to know what ends up happening? And will there be transparency for the people to get their money back here?
Well, everybody's attention span is about 2 seconds, so nobody's going to care in 2 years anyway. Let's talk about how good this is, though. This event is great for this space. Number one, where there's drama, there's usually money, brings all the small brain people in. And then because there's drama, the small brain people want to keep up with it. So they're going to have to get educated. So you get people educated in the cryptocurrency markets and business, et cetera, et cetera. And then lastly, anybody looking to enter the business is going to have to be more stringent with their accounting. They're going to have to be more by the book, all that, you're not going to be able to just come in and just fraud your way through this business anymore, which is good for the space. Like, we want people to be accountable, we want people to do good business. So overall, this is a great event for us.
All right. Now, Forrest, do you think that Gemini are they completely innocent, or are they maybe slightly complicit and just trying to do their best job of, pointing a finger?
Yeah, so at the end of the day, everybody involved has some responsibility. As as CEOs or founders of Gemini, they do have responsibility to do due diligence and make sure that the people that they're lending money through or lending money to are going to have the capacity to pay it back. What I see going on here, though, is Barry Silbert, the CEO of DCG, he's buying time. The longer he can delay some sort of agreement or settlement, the better the terms are going to be in his favor. What I mean by that is you have the Winklevoss twins who have customers on the hook for Gemini's Earn program. The longer DCG can the more can buy and the longer they can ice them out, the antsier those customers get, and the more pressure is put on the Winklevoss twins to reach some sort of settlement or some sort of agreement. And that means that they're going to be willing to make more concessions just to get their customers' money back. So I see this as a strategic play for Barry. I don't think he's been picking up the phone, or at least he's been accused of not responding to emails and not responding to offers to meet and to come to an agreement. And I think that's completely strategic. He wants to wait as long as possible to get the best possible terms of any agreement between Gemini and DCG.
All right. And I do want to share this segment brought to you by presyn.io. You can send securely. Don't got to worry about it disappearing. Now, I want to share a couple tweets. One, a little facetious, kind of funny. One, kind of a little more serious. I like this guy, Big Chads. One good name. New number, who dis? I like that. Hey, what $1 billion? But then, there's people taking it a little more seriously here, Caleb. Cameron, why did Gemini just take their word for it? Why didn't they verify you gave nearly $1 billion of your customers' money to them? You should have continually audited here. Now, what do you think of that? Is Tyler and Cameron somewhat at fault here for just, giving away $1 billion that technically didn't belong to them? Or, hey, it was bull market. We all kind of thought, that was a sustainable yield.
Yeah, perhaps. And, I've generally tried to kind of stay out of this situation and the drama. I had money on Gemini, not in the Earn program. I was always pulling it off that platform. So I was really happy to kind of dodge a bullet, so to speak, with this. And since then, I've kind of just tuned it out, aside from just some general headlines. And so for me, I think, I don't necessarily believe that Gemini as a company or the Winklevoss twins were complicit in this, but I think that tweet makes a really good point. In addition to what Forrest just mentioned, I think those were great comments there, Forrest. But generally, right, a point could be made that they were certainly negligent, right? And so I think that's what that tweet is trying to point out. And so I don't know the extent with which audits were conducted or what kind of background information was pulled or this, that, and the other. How much of an understanding do they really have of DCG's lending activities, so on and so forth. So it's hard to say, again, what motives were here, what knowledge was available to these kind of insiders, if you will. So it's hard to say. I'm just personally grateful I don't have any money on that platform. If you're always wondering how these yields are coming about, it's because you have the internal centralized companies are lending it at an extremely aggressive rate of return. And so, rates of return are always going to be congruent with risk. And so if you're seeing yields that are too good to be true, it's usually because they are.
Yeah, I mean, that's perfectly put. If it's too good to be true, it normally is. In fact, I would maybe say it almost always is. Now, better call Chris. It looks like they should have, better call Saul there, because what is up with Cameron and Tyler? They just seem to trust everybody. They trusted Barry with $1 billion of money that wasn't theirs. They trusted Mark Zuckerberg to build this platform with this idea that was theirs. They keep getting hosed by these people they trusted. When will they ever learn their lesson? Did they maybe know a little bit more than they're saying here, Chris? What do you think?
I reckon then they must have known a little bit more than they're saying. I just realised I'm a bit gutted now because all my brave coins are on Gemini, so I won't be getting them back now.
It is the earned product. It's the earned product. Were you earning yield, or you just have a citizen custody?
Just got the custody on there.
Oh, you should be good. You should be good. I haven't pulled from Gemini myself, so I think you're good.
That's good. But they must know a little bit. If you knew when it comes to a business, you know what's going on, like what's coming in, what's coming out. It's just when people play dumb and they'll be like, "Oh, I didn't know that happened. I didn't know that was going to happen." You can't be doing that.
All right, and we'll just end with this. Hotep, looks like you won it now. Barry, clearly he's trying to play dumb like SBF. Were either one of them clueless, or do you think Barry and SBF both know what's going on?
I'm gonna say it doesn't matter, right? Like motive doesn't matter. The people when people lose money, do they care if you did it on purpose or not? They want their money back, right? So I don't really deal in the whole motive situation. However, I think the motive situation is something for the courts to handle and the courts to figure out, because that's what you need if you're going to convict somebody of a crime. You need to have motive, intent, et cetera, et cetera. But for the people, I don't care.
No,
I do care about the SBF situation. I mean, this guy
There's
had
a whole nother level
colluded.
of fraud, much
Yeah,
higher
this is a
levels
whole.
here.
Well, it's not even the fraud so much. It's the fact that he sat in government and worked with government to regulate cryptocurrency space. Then he was moving the money into the Democratic Party, influencing his elections, and his mom had the statistical model that she was using to help the Democratic Party win. And all that started like right when Biden announced he was going to run. And it's just like, or somewhere's about. So yeah, that's my issue, is when you start dealing with government, mixture of corporate and government. I'm just like, hold up.
Yeah.
What's all this going on?
Yeah, and you brought it to your earlier point. Never tried to be a mind reader. Those watching at home learn this from Scott Adams. You don't want to be a mind reader. Just try to avoid reading minds. But that is all we have. I should have stopped at 23 so we could match Caleb's jersey there. Hotep, you ended up taking it home. Coming in like 23, not 45. Hotep, feel free. Leave us with some parting thoughts.
Yeah, I think what I want to leave with people today is get my white paper, the Patriot Report, Unmasking Conspiracy of Money and War. It's my deep dive into the history of how central banks in America came to be, even starting with the Central Bank of France under the tutelage of John Law, or the supervision of John Law, and then moving into the United States, and it's all of its central banks and the wars that were fought for it and against it, from the Jeffersonian period on to the Jacksonian period. I think if people see those trends, they'll know what's coming.
Wait a minute. Are you telling me that maybe banks are involved with financing wars? It seems like that's where we're heading here. Whoa. Well, I couldn't imagine that. All right. That's all we got time for today. Definitely something worth looking at. Eisenhower was right, and that's all we got. Make sure you sub to everybody's channel here. Make sure you got on notifications. Follow them on Twitter. They're all putting out great content. Until next time, Bit Squad, easy out.